Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on July 23rd, 2013 here on the East Coast, and we're going to take a look at the chart after I read this to you. The website and the video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's see if we've got anything interesting happening today. Well, the first thing is the S&P was down just a little bit, less than 0.2%, which in and of itself isn't really anything to be concerned about. But what I want you to see is it sort of looks to me like this lower support line right here is showing a crack. Right here, if we put it in the context of this channel, you can see that really that's just a little crack. I mean, it's not a big failure. It's nothing like what we've seen like back in the middle of June when we would be down, 20 something points in a day. Eventually, we know we're going to have days like that. But if we move in a little closer, a couple things to show you. The first thing is, we'd been looking at this little short-term support line right here, and it sure looked as if early on we were going to get another move above one of these lines that would lead us up, but that it looks right now that area at about 1700, it looks like people were anxious to get out upon getting close to that level. As a matter of fact, our high of the day was set on that first 5-minute candle at about just under 1699. So, it's almost as if people said, give me 1700. Tell you what, not going to press my luck. Give me 1699 and I'm done with it for a while. It sort of looks that way. So, sold down. It looked like we were going to bounce on our support line down here. And again, I want to remind you, this is one of those lines that really kind of is defined by these first two touches, and then we have a pretty long stretch where we don't have a touch. So what that means is, just like I've used the analogy for any of you guys who've shot a pistol at a target range, the distance between your front sight and your rear sight has a lot to do with how accurately you can get that gun on target. So if we have our first data point here, our second data point here, if either one of these is just a little bit off through either where we put our line or maybe even through just some little trading anomaly, then we're not going to be extremely accurate when we project that out another 2.5 or 3 weeks. But that said, if we use the closest and most, what's the word I'm looking for? If we use a literal interpretation of this starting point and this as our second data point, then there is no way we can draw this line where our close today was not underneath it. And you can see it almost looks as if we got up over this line, started to bounce on our support line, but then hugged it for most of the day, and then finally it appears as if this played out like a very, very, very small bear flag, and then we did break this rising support line. Now the margin of the break, if we measure where we ended up, at the low point it was about 1692. So we're only really about 0.3% underneath this line. That's not a major break, but I think it's still enough to where we have to look at it and say, okay, this could be the precursor to a more technically significant break that could take us down into the 1670s, down to about 1654, or even down to tag this line at some point underneath 1620. So these are, if this downward move continues, I see these three lines as our likely areas of defense, speaking from the standpoint of bullishness. So this rising line right here, if we take a look at it, you'll see where it is, where that comes from. That is drawn over 1, 2, 3 tops back in June and extending it out. That could provide support. If not, this is what we were sort of expecting in the way of a neckline at about 1654. That could provide support. Finally, we've got this orange line that we broke out over and never really got a back test on. That could provide support. So right now, I don't think this is quite enough for us to say for sure, yep, this upward trend is over, fine, it's done with, because it's not a huge break. But certainly, I think it's enough to where we have to take notice of it and to be prepared for the possibility that this is the break of this upward channel in progress. And if you want to look at it this way too, you could maybe, this is not a perfect thing I'm going to do here, but it's also possible that the past 2 days of trading is kind of making a little head and shoulders here, but it would be down sloping. So if we do start to move down tomorrow and we break this little line right here, then I think that's probably good enough evidence that indeed we are going to sell off for at least a couple of days, maybe more. So I think that's about all I can really tell you. We had this support line coming into the day. We had this support line coming into the day, and both of those broke near the end of the day today. And we know that trend lines are made to be broken, so that really should come as no big surprise. Let's see if this trend continues tomorrow, and if it breaks this line, then that's when I think we likely head down for some more serious selling pressure. So there you have it. Appreciate you taking time out of your day to watch this. Take care, and look for tomorrow's video after the close.